You have Axis Bank, which we've already kind of told you about, that reported a not so great set of numbers only because of the slippages that stood out. But Harsh is joining in to break down the numbers for you. Harsh, that was a standout for me because asset quality not materially changed, but slippages was one to watch, right?
Well, absolutely, Alex. So you're looking at operationally, the numbers looking okay, and I'll run through the numbers quickly. The net interest income number was largely in line with expectations. In fact, bang on in terms of NDTV profit expectations. You're also seeing that operationally, they've tweaked the OPEX a little bit to accommodate for a larger provisioning, which they've done. Flat when you're looking at it sequentially, but when you're looking at it on a base effect level, the bounce is substantial, more than doubled in terms of the provisioning number. And you're looking at PAT, therefore, largely in line. So the OPEX was tweaked to accommodate a better operating profit metric to ensure the larger provisioning which they've done by 200 to 300 crore. And therefore, PAT is largely in line. Again, your NPA ratios are largely there. So that's, if at all, a positive in that sense. But the negatives, the slippages, as highlighted, were markedly higher. You're seeing the slippage ratio gross climb to 2.13%, which is a 35 basis point climb on a sequential basis. Retail is actually the culprit behind this. So that's the one big piece. The second one is growth. It's just absent. You're looking at 1% growth on a sequential basis, single-digit growth on a year-on-year basis. And while they justified it by saying that deposits on a quarterly average balance perspective was double-digit or maybe 13-odd%, so in the teens, but you're looking at the quarter-end number being just single-digit, which is market share loss in that sense. And for an Axis Bank, that is big, given the Citi acquisition, given that the kind of customer cohort that they've added over the last 12 to 24 months, given the Citi acquisition and the number of branches they are adding. So all of that really not adding up in terms of growth, which is the key. The last point being that your margin decline also is quite significant, 6 basis points in that sense. Now they're 13 basis points from their general average, historic average at 3.8%. And here the cost of deposits or cost of funds have gone down by just 3 basis points. And therefore, the margin taper is largely on the back of assets and yields. And therefore, slightly concerning on that front as well. Quite a few negatives, more negatives than positives.